recently the first IPO of a REIT have happened. The first initial public offer. So we have only one REIT IPO has happened till now. Even though the regulation regarding real investment trust have been given way back in 2014. So just after 5 years only, or after 4.5 years only, the first IPO went, and it have been successful also. Okay. So for that reason, they can ask you factual question regarding the first REIT IPO, as well as the concept of REIT, real estate investment trust. And again regarding REIT also, SEBI have made, in order to make it attractive, it has made some liberalization regarding the regulations regarding investing in a REIT. We will see all those things. So there are two reasons why REIT is very important. One is the first IPO of REIT happened, the company, the trust name is Embassy Office Parks REIT, a joint venture of Blackstone, which is a very private equity investor, a foreign private equity investor, and realty firm Embassy have raised 4,750 crore from the first REIT in India. So something first means it is very, very important. Okay, first time through a REIT, and that too through a public offer, they have raised 4,750 crore. And again in March 2019, SEBI have decreased the investment limit to 50,000 from 2 lakh. Again, if you read a material on real estate investment trust, any material on real estate trust, they will say that the minimum investment under REIT is 2 lakh. But actually it is not. Now the minimum investment under REIT is 50,000 from which time onwards? From March 2019 onwards. Okay. So in order to increase the participation of investors, the minimum investment limit have been decreased to 50,000 by SEBI. These are the two important recent changes. So because of that, REIT as a concept is very, very important for you. Okay. Now we will see that you just expand again these topics. Okay, real estate investment trust and infrastructure investment trust, both are very important for your mains also, because in mains there is a topic called investment model. These are the two new models, investment models, real estate investment trust and infrastructure investment trust. Okay, so if you expand these words, okay, you will have an idea what is this all about. Okay, first, it is a trust. It is a trust. It is a financial security, but the structure of this financial security is like a trust. A trustee will be there. What is the specialty of a trust? A trustee will be there, and trustee will be managing or the asset of that particular. So first keyword is that it is a trust. This real estate investment trust and infrastructure investment trust, it is a trust. So a trustee will be there who will be managing it. That's a key thing. Then it will be investing only in real estate. It will be investing, this trust will only invest, this financial investment will be only made in real estate, nothing else. So if you know these two things, you can answer it. And another key feature is that it is similar to a mutual fund. This trust is similar to a mutual fund. What is a mutual fund? You know what is the concept of a mutual fund? In the case of a mutual fund, an investment manager, what he will do? He will raise funds from the public, from many public investors, he will raise fund. And normally what this mutual fund do? He will invest in a financial security. In most probably it will be in shares, in debt instruments, or both. That we have seen it. So similarly, REIT also, since it is similar to a mutual fund, what this REIT will do? Difference is that, function like a similar to a mutual fund. See, in mutual fund, when they invest in stocks and bonds, here where they will invest? Real estate properties, where mainly income generating, another important word, okay, they are mainly investing in income generating real estate property. For example, flats, then malls also real estate. You know that malls, if you give rent to any shop, it is income generating. So malls, shops, like that, any real estate which is income generating, they will invest in, these trust will invest in that particular real estate, income generating real estate, and the income they get distributed to the unit holders. Again, like in the case of mutual fund, the investors will be given unit. one unit, like in the case of, so depending upon the unit, as per the SEBI regulation, it is saying that after every 6 months, the unit holders will be given dividend, the income generated. But the recent trend we are seeing is that they can give even quarterly wise also. Okay, just have an idea. So based on the income, the profit which have been made from the real estate investment will be distributed among the investors in the form according to the investment they have made. This is the concept regarding, simple concept. Okay, you should know what is a mutual fund. You should know how a trust function and where it has been invested. It is invested in real estate, income generating real estate only. Okay, so basically they are securities. Okay, again try to understand, they are, the expansion of securities is widening by, they all are securities. Okay, shares is a security, bonds is a security. Again, REIT is also a security. Okay, what is the specialty of security? They are linked to real estate. Okay, and another important thing, unlike mutual fund, they are traded in a stock exchange. So after giving the share to the unit holders, what this REIT will do is, it will get listed in a stock exchange. Once it is listed in a stock exchange, what will happen? You can buy and sell it at any time. And so this is the one of the advantage of REIT, that there is liquidity in this investment. Normally in real estate investment, is there liquidity? No. Whenever you wish to sell, you can't sell real estate. If you have a property, you want to sell it tomorrow, you cannot sell. You cannot sell it within 1 month also. Or if you want to sell, you have to sell it at a lower price. But in the case of REIT, you can, since it is traded in the stock exchange, and during the trading hour, you can send how many units you want. So this is another important. So there is high liquidity for this particular financial security. The reason being, it has to be traded on stock exchange once they get listed. So after the public offer or whatever offer they are making, it should get listed. Okay, so it means that it is traded is there. And regarding the structure of REIT, I already discussed, it is similar to a mutual fund. So in the sense that they raise funds from many investors and invest in income generating. The keyword is income. Most of the investment will be in the income generating real estate properties. Okay. So they are structured as trust. It means that the assets of this trust will be, the holding of this asset will be done by an independent trustee. The asset will be managed by an independent trustee on behalf of, because who is the owner now? Unit holders. So unit holders, because it cannot give this to a fund manager. So fund manager have to be accountable. So because the trust will look into, the independent trustee will look into the asset of this particular investment, so that it is free from any interference from the sponsor. Okay. Then this is another very important thing. Okay, normally in the case of mutual fund, this unit holders who have invested in REIT, they will get dividends regularly. Okay. So again, regarding the key things you need to understand is that what are the different profit this REIT you will get. Okay, one is that the rental income. Rental income means you have, try to understand that if the REIT is purchasing, imagine a particular REIT is purchasing this mall of Travancore. That will not happen because Malabar developers will not do that. They have a lot of money. Now, I am just giving an example that if a particular REIT is investing in Malabar developers, it means that this Malabar developers who have constructed this mall of Travancore, they are selling it to this particular trust. The real estate builder is selling the asset to the whom? It is selling the asset to this particular trust. Now trust have become the owner. No, but actually the trust is the owner. So trust is just holding the asset on behalf of the investors who are, we call that investors as unit holders. Okay, so naturally, if the mall of Travancore is getting rental income, obviously you can see that many shops are there, it is getting rental income. Okay, then the second thing is that in future, after 5 years, when Lulu Mall have come, when their sale have come down, Lulu Mall obviously will come in 2 years. Okay, so I'm just telling you that if they want to sell it, obviously if they want to sell it without absence of, they can sell it also. This REIT can sell that asset to some other REIT or some other developer in future. They have the option to do that. So when they sell a particular asset, naturally capital gain will be there. You getting the point? Capital gain will happen for any asset now. So again the capital, once you sell the asset which the REIT is holding, it will get capital gain. So capital gain also will be distributed. You are getting the point? Any asset will be having capital gain. We have discussed what is capital gain. So these are the major income for unit holders. One is rental income and capital gain. If the real estate assets are going for a profitable sale, then only capital gain will happen. Okay, just have an idea. Okay, then another very important. Okay, as per the SEBI norm, as per the SEBI 2014 regulation, 90% of the income generated by the trust have to be distributed in the form of to the unit holders. 90%. Same the case of infrastructure investment trust also. Okay, 90% of the income generated has to, after the expenses, should be given to the this unit holders or investors in the form of dividends. Okay, so that you need to keep in mind. Okay, now how the money is raised through REIT? Mainly through IPO. Money is raised by a REIT through an IPO. Okay, now I'll give you an example. Okay, another from the real estate property point of view, I'll give you an example. Okay, imagine I am a real estate developer. Imagine how REIT is going to see. Till now I have explained the benefit from the investor point of view. It is a good investment. Okay, you want to invest in real estate. Okay, normally if you want to invest in real estate, what is the problem? You require huge money. Because if you want to buy a property, you require huge money, 10 lakh, 25 lakh, 30 lakh, 50 lakh. But with this reduction, with small amount also you can invest, you can have a small piece of real estate asset. Okay, so that is one advantage, and also it is liquid also. All these things from the investor angle. Now think from the real estate developer angle. We know that as a real estate developer, the most important, the major problem for a real estate developer is that his money has got stuck up with in many properties. Getting the point? Real estate developer, he has built 5 flats. All the money, and he has taken most of the money from, out of this 5 flat, 3 flat is completed. 2 flat he could not able to complete because he is not having sufficient fund. And already he has taken loans from the bank and he is finding it difficult to pay EMI to the bank. Now, what this developer can do? Developer can sell this. The developer of this real estate, either he will create a real estate investment trust and transfer all the properties to the trust, and the trust will issue an IPO and will raise the fund and give that money to the developer. Now what the developer will do? Developer will give that, settle the, see now all the 5 flats have now gone to the trust. Developer got the money. Okay, and what the developer will do is that first he will pay all the debts. Banks are very happy because bank cannot give loan for this long-term investment. Okay, it's a risky thing. Banks are happy, he has paid the bank. So one big problem of the economy is solved. Real estate is now having liquidity, that to equity liquidity. What he will do? He will complete the remaining 2 flats, and again that will generate income for the unit trust holders, because once you complete the flat only you will get more income, and thereby there will be more economic activity for the economy, more employment opportunity, good for the economy. So this model is a very good model for everyone, for the economy, for the developers, for the investors, etc. So, but it was facing very difficult, means it was not attractive because of many stringent regulations of SEBI. SEBI then over a period of time have reduced many stringent regulations. Okay. Now again, another thing you need to keep in mind, this concept of investment trust or real estate investment trust have originated in United States of America, USA. The origin is in USA. It is a very successful model. Real estate investment trust is a very successful model. So this is actually a simple figure. It's a figure which you will understand that, see, REIT, what they do, they take money from the investors, invest in these real estate income generating real estate properties like malls, office spaces, warehouses, hotel, apartment, all are what? Income generating real estate property. They will get the rent and other thing will be getting as profit, and out of this at least 90% of the profit will be distributed back to the investor. This is the model regarding real estate investment trust. Now the structure of the real estate investment trust, okay, I told you it is a trust. So since it is a trust, you see that, okay, so the REIT, real estate investment trust, REIT, so obviously a trustee will be there. If there is a trustee will be there. Trustee will be managing the asset of that particular trust. And there will be a manager also to manage this, and he will be independent. Manager will be independent. And there will be property managers will be there. So see that this REIT will be holding, is in control of now the, trustee, it will be in control of this real estate asset. And see, there will be property managers and REIT managers will be there to deal with the real estate asset. Okay. Now regarding the unit holders, they are the investors. Unit holders are the investors, mainly fund raised through IPO, and even REIT can also raise fund through lending. REIT can also issue bond and can raise fund, okay, to complete the project. They can raise fund through unit holding also. They can take money from lenders also, or they can even give the loan also. So both the way they can raise the fund, okay. Then again, there are different types of unit holders are there, different category: retail investors, institutional investors, and cornerstone investors. They are prime investors. Okay, just have an idea. They will not go too much in detail once you know it. Okay. Now regarding the significance of REIT, we already discussed the significance of REIT. Okay. So from the investor angle, okay, from the investment point of angle, okay, an investor who is freeing the risk of investing in a physical purchase of property because of the risk involved, REIT is a good alternative. Why? Because of its liquidity. Okay, so it's a good, because he can buy and sell the units of REIT on the stock exchange, and he can easily, so risk is comparatively lesser. It is highly liquid compared to the normal physical property REIT. Comparing the REIT with physical property, it is highly liquid, less risky, and also those investors who want to invest, but not having the sufficient money to invest in commercial real estate because of high capital value, REIT is a good option, because now the REIT minimum investment have been reduced to 50,000 with small multiples of 50,000 amount you can invest. Okay, so 90% will be distributed to the investor or unit holder, and it is a good stable income. REIT will provide a stable income. So these are the advantages for the investors, and already we have discussed the advantages from the real estate developer point of view also. Now coming to the taxation, again, any financial security, when you study, you need to study the taxation aspect also. Note down, I think it is not there in the material regarding taxation. So the prime earnings for the real estate investment trust or for the investors or the unit holders will be getting dividend, okay, they will be getting rent, they will be getting interest if they have invested in any interest generating income. If the REIT have invested in interest generating thing, they will get interest also, okay. So these are the three major earnings: dividend, interest, or rent are the major earnings for the REIT investors. Now accordingly, this interest income and rental income will be added to your income tax. Rental income will be added to your personal income. Interest income, so it means that interest income and rental income will be taxed, and will be taxed based on your taxation structure, personal income taxation structure. But dividend is tax free. And one interesting thing is that since most of the you will be actually REIT as an investment or a investment model is just new only. It is just growing in India. Okay, so we will see that any more incentives the government will give to REIT, we have to wait and watch, because it has a larger impact over the economy. So since most of the income earnings is being given through dividend. Most of the income is being given through dividend. There is a high tax-free status is there for this particular instance. Majority of the earnings, the REIT is giving to the investors through dividend only. So that dividend tax-free status helps them to make, also this is another reason why this particular financial security is an attractive instrument. Now regarding the IPO, this is again another important thing about this particular IPO. So this IPO happened in March 2019. The first IPO happened in regarding the embassy. IPO name is, REIT name is, it's the first embassy office parks REIT. Now normally these facts are not important. Why this embassy office parks REIT is important? Because it is the first REIT in India. It is the first and the only REIT in India. Okay, and it has, see, it has raised, I told you, 4,570 crore. And see the unit amount per unit, it was charging, per unit, it was charging rupees 29. So this was it, at 300 rupees only, this unit was sold. And the minimum application size, okay, now try to understand that before the, see the minimum 2 lakh investment was there up to March 2019. In March 2019 only this 2 lakh have been reduced to 50,000. So already SEBI have given the approval for this REIT IPO. So when they have applied for the REIT IPO to SEBI, when the SEBI have given approval for IPO, that time the minimum investment requirement was 2 lakh. Now in future any REIT IPO happens, it will be brought down. Okay. So in this case they have 800 units into 300 means the minimum investment was in this case REIT IPO was 2.4 lakh. It said that minimum 800 units should be purchased by an investor. So it means it came around, and then in the multiples of 400 units. Again, if you want, you can buy 1,200 units, 1,600 units like that. 400 units multiple. Not that important, just for your idea. Okay. Then, if you want to invest, you need to have a demat account. Okay. And eligible investors who have invested are Hindu undivided family, eligible individual, family trust, intermediate registered with SEBI, NRIs. See, this is very important. Okay. NRIs is not banned. NRIs can be investor companies, corporate bodies, and registered societies. Okay. Just have an idea regarding this Embassy Park REIT IPO, and it was a successful IPO.